Hello, I'm James Haft, co-founder of Crypto Oracle with Luke Herner, and we're sponsoring the security track offering track here today. We are going to do this next half hour on listing your token on an exchange. We're lucky to have Open Finance Network and AirSwap here, two of the leading players in the market. It should be really interesting. Why don't you guys introduce yourselves first, briefly? Maggie?
Good afternoon, everyone. My name is Maggie Hsu, and I'm on the business development team at Fluidity. Fluidity is a technology partner for the tokenization and trading of security tokens. Our first product is AirSwap, which is a decentralized trading network for ERC20 tokens. Prior to that, I was living in Las Vegas, working as chief of staff to the CEO at Zappos.com, the e-commerce company, and actually got interested in blockchain because at Zappos, we were operating under something called Holacracy, which was a self-organized system. And through that, learned about decentralized autonomous organizations and blockchain.
Great. Hi, I'm Tobin McComas with Open Finance Network. First, a shout out to James and Lou, Karen, Jennifer, the Crypto Oracle team for putting on a great event once again. So Open Finance Network is a security token trading platform. Our team has operational experience in illiquid secondary markets. So Open Finance Network is really a mechanism to improve the liquidity profile of traditionally difficult to trade securities.
So I'm going to do something that I usually don't do on panels, but try and be brief. I want you guys to explain what your business is, because we hear exchanges, we hear security token exchange, but none of them are actually functioning from our perspective yet. We don't really understand what they're going to do or how they're different. So explain a little bit about the history of your company, and then what is it that you're trying to do as succinctly as possible.
Sure. So we think about the landscape in kind of a two-by-two, and one is on the primary issuance side, and the second is the secondary trading side. And then the other access is essentially utility or consumer tokens and security tokens. And so AirSwap was launched in April of this year, and it's essentially a secondary trading platform for utility tokens. It was designed in a very specific way, so it's a non-custodial design. There's no central limit order book. All the trades are really done in a peer-to-peer fashion, and that's not something you see every day in pretty much any crypto trading. And so when the rise of security tokens came about, it seemed like actually quite a natural pivot for us to go from secondary trading of utility tokens to secondary trading of security tokens, and that's really where we specialize. Along the way, though, there are just, I think, so many opportunities in the space that we ended up a bit earlier in the stack, so thinking through primary issuance and tokenization as well.
Great. Yeah, so as I mentioned, we have operational experience in illiquid non-listed securities. So things like non-traded REITs, hedge fund shares, private equity shares, EB5 Visa assets, really esoteric, difficult to trade types of securities. And so as we look to scale that business, the biggest challenge for us was settlement times. So once a trade matched on the platform, it could sometimes take 6 weeks to actually settle that trade, which, as everyone in this room knows, no institutional type capital is going to play in that space with settlement times of 6 weeks. So blockchain for us was a mechanism to take that settlement time from 6 weeks to, in theory, 6 seconds, and now you create a much more efficient market in some of these illiquid securities. And so that was really the origination of Open Finance Network. And then 2017 happened. And you see all of these capital raises in this unregulated space in the utility token world. So we had the foresight to see that this was eventually going to become regulated. And a natural extension for us was to trade tokenized securities, because at the end of the day, the securities are still Reg Ds, Reg Ss, Reg A+, Reg CF, things that we have been trading all day, every day for 4 years.
So Maggie, can you talk, thank you both. Could you talk about the process of getting listed? How do we approach you? What are you looking for? What matters? And how do you get to yes?
Yeah, so it's a little bit different on AirSwap. We actually don't have a listing process. Rather, tokens are made available for trade on the AirSwap network. Essentially, someone is looking to trade that token, to make that token, be a market maker. They want to buy or sell it. They can put it on the AirSwap network, and as long as it isn't fraudulent, essentially goes through a blacklist process, it can be traded. In the security token world, a little bit different, but I think that it's still pretty interesting because, I personally think about it like eBay for tokens, right? It's buying or selling directly in a peer-to-peer way, and I think that's a much more natural way for these things to trade. You think about stocks, and those can be traded, through the stock market, but a lot of these tokenized securities are really going to be tokenized private placements and tokenized private offerings, and those don't trade with that same frequency. So this OTC style is actually much more suited to how these things should trade, and just because you're tokenizing something doesn't mean you're essentially changing the nature of it.
Tobin?
Yeah, so I would say we're a little bit more traditional relative to Maggie's comments there. So the process for us is really two-pronged, if you will. So rather than compete in the actual issuance space, we've chosen to partner with the issuance platform. So I know Securitize has been up here, Polymath, TokenSoft, Atomic, et cetera. And we kind of view them as our listing pipeline. And so we've partnered with them from kind of a compliance standpoint as well as a tech compatibility standpoint. So I would say that's really our first hurdle, is allowing the issuance platforms to do their due diligence and their vetting of the projects. And that point, we would then be brought in and do our own compliance checks, KYC, AML, bad actor checks, et cetera.
So where is the market now? Because, we hear every 2 weeks someone's announcing that they're open or they're imminently going to be open and there's going to be exchanges. So right now on your platforms, what's happening? And what is the process to get to further liquidity? Because that's really the key for everyone here.
Yeah, I'll jump in. I'm sure some of you have heard this from me before, but I like to say we're still in the national anthem, right? Like the game hasn't even started yet. So, as we look to launch, we have actually fully integrated with Securitize on the issuance side. We're in live testing right now with the SPICE VC token. So we're expecting live trading to launch really imminently, which is very exciting. And so as we look at the pipeline, we know of 150 tokenized projects out there which are looking to raise capital and eventually issue between now and sometime in 2019. I can't tell you how many of those are actually going to be successful or how many of them will actually list, but given where we are today, that feels like pretty healthy pipeline. So that's kind of where we are today. I'd say by the end of the year, 10 or 12 tokenized securities should be listed and trading on our platform. And then, we kind of model out another 5 to 10 a month throughout 2019.
Maggie?
Yeah, I have a very similar answer. I mean, the first tokenized securities, the first, I'd say, fully compliant tokenized securities are just starting to hit the market. And so I think towards the end of this year, you're going to start to see some of these exchanges coming online, and you haven't really seen that yet. And so it's very exciting. I think the end of the day, the question is going to be about liquidity and where's liquidity. And so I think we do need more of these platforms, for these tokens to be trading. I think you have something like 150 tokens, and I don't know where these will be. I don't know which ones will be successful. And I actually don't know where the interest will be. And I think we're not quite sure, let's say, for the overlap between accredited investors and crypto enthusiasts. So do these potentially accredited investors want to be trading in tokens, or do they want something that's much more comfortable for them, and that's more of a fiat world? And so I think there are a couple different approaches there. We actually just announced a couple weeks ago a partnership with a company called Propeller to tokenize a $30 million real estate condo in New York City in the East Village. And that was pretty exciting because, I think real estate is one of these asset classes that a lot of people are interested in. And I think that there's going to be a lot of interest there because you can basically take the real estate capital stack, and you have your debt and your equity, and you can actually replicate that through tokens. And so you can have your debt token, your equity token. You can actually replicate the entire waterfall payout. I know in one of the earlier panels they were saying that when you're issuing tokens, it's hard to map that back to a traditional analysis, right? So what is the NPV analysis? Can you calculate your IRR? What does that look like? It's definitely easier with debt, but I think you're starting to see these new models of tokenization that allow you to take traditional assets and put them on the blockchain.
And how does compliance fit into all this? What does it all happen before they get to you, or are you coaching the companies, and where are the pitfalls?
What's compliance?
Exactly.
What? Can you help me with that?
They sound like my clients.
Yeah, I mean, that's definitely something that keeps us up at night, is compliance. And so that, again, for us, is part of the vetting with the issuance platforms. We want to make sure that the smart contracts and the protocol that they're working with have that regulatory kind of layer built in. So there's that aspect of it. And then obviously we will do our own compliance checks through our team once we're engaged. And I think that's maybe a good segue into when is the right time to engage an exchange or us. What we're finding is people, issuers, are finding it very valuable to have some type of listing agreement in their pocket when they go to raise capital. Because as most of you may know, the first question you get is, where will it trade? How can I trade it? Where will it be listed? So we're finding projects wanting to engage in those discussions very early, sometimes too early, and they're not quite ready to talk to us. But the optimal point to engage us would be after you've completed your PPM, your OM, you're about to go fundraise, and you've either selected or have narrowed down the issuance platform that you're going to engage with.
And I actually think compliance is very exciting in this world because you, for the first time, have programmable compliance. And so we're working with Securitize and a couple of these other standards. But if the securities laws are actually pretty solid and you know what the rules and regulations are, you can program that so easily into the token. And let's say you can only have 2,000 owners or 1,000 owners, whatever that is. You can actually put those restrictions in there. And so when we talk to people outside of the crypto world, they say, how do you know who owns what? Isn't this all just, scary, hacking, Bitcoin? Like, I just had a conversation the other day where the person, that was all they could think about. And I said, well, actually, you can do KYC. So you KYC the different wallets, and you could actually issue a token to these wallets. And let's say someone is trading and they're looking to acquire quite a few tokens of a specific asset class. You actually know when they're acquiring a certain percentage, and you can build that in, and you can reject that transaction. So I think it's actually one of the simplest things and one of the biggest benefits around tokenizing these sorts of things is the back-end paperwork and the back-end processing. It's not necessarily the sexiest thing, but it's definitely one of the areas in which we'll see the highest impact.
And how important is the origination of the token itself and the smart contract? Are you getting involved with that? How do you due diligence it? And how do I make sure that I don't handicap myself in coming to the platform by having made a mistake at that stage?
Yeah, that for us was a strategic decision to not necessarily compete in issuance. When we drew this up, we thought that we would be kind of that end-to-end issuance through settlement platform. But we saw the space get pretty crowded, and again, viewed the issuance platforms as listing pipelines. So our process is really to do the diligence at the tech level to make sure that compliance is built into the protocol. Because at the end of the day, if these securities start trading on our platform in a non-compliant fashion, that's going to be big problems for us. So it's a major part of our due diligence with the issuance platforms, and our tech team is responsible for conducting that.
Meg?
Yeah, I'd say work with a company like Securitize or Harbor. And a lot of these things, we're still actually single jurisdiction. So I think the promise of security tokens is that these can be traded anywhere in the world by anyone. And realistically, they're traded potentially in the US only and only by accredited investors. So when you're thinking about the primary issuance side of things, it's working with companies that have thought ahead to, how can we compliant in multiple jurisdictions? How can we compliant in different sorts of restrictions? Following along, whether it's Reg CF or Reg D or whatever that looks like. So again, we also don't do a lot on that side, but I would say also just hire a good lawyer.
That was the paid advertisement. Talk to me about standardization, because, starting the beginning of the year, it was just the Wild West. There were no standards. No one understood how you could trade from exchange to exchange. Is standardization important? And where are we now in terms of establishing standards that will form a foundation for the next 12 to 24 months?
I think that's a good question, and one I don't think I have a great answer to. I would say interoperability as opposed to standardization at this point. And by no means am I a tech person, so I can't get into the details of the actual smart contracts, et cetera. But in speaking with our team, it feels like most of the protocols are actually very similar today. So maybe we have some fragmentation early on as players look to establish themselves. But I think over time, we probably come back towards more of a standard type of a protocol, which then would be open source and make interoperability much easier than it could potentially be.
Maggie?
Yeah, I think over the next 6 months, we'll see a very clear set, whether it's 1 or 2 standards. That'll become clear pretty quickly.
And so we have up here a centralized and decentralized exchanges, right? So explain, Maggie, what's the advantage of a decentralized exchange?
I'd say there are really 2, and one is essentially having more assets available to trade. The second is in how they're traded. So I think the first, if you think about a centralized custodial exchange that's trading security tokens, every single asset that goes on that exchange has to go through a regulatory check. And so it's extremely limiting as to what can be traded. And so with a non-custodial exchange, you can trade really that long tail of assets. I think that's pretty exciting. The second one is really around how it's traded. And as I mentioned earlier, a lot of these exchanges are being built with what are called central limit order books, where they're putting orders together and matching them and executing them. Our strong hypothesis is that most of these things are trading more over the counter. They're trading peer-to-peer, and they're trading slower. So this doesn't have to be executed within milliseconds. There are probably some diligence that's needed. And so there's actually much more of this conversational trading. And so at AirSwap, you can actually have a conversation with the counterparty. You can do your diligence, download the documents. You can better understand what that looks like. You can potentially negotiate the price even. And I think that those are kind of the 2 benefits that we see.
Yeah, and I would say centralized is really the need for institutional adoption would be the custodian piece. As we look at how we scale our business, our goal is to have everybody in this room be able to buy and sell security tokens through their Schwab brokerage account or their Fidelity brokerage account. And so for those institutional type players to get involved in the space and allow that, we believe that you're going to need some industrial strength custody type of solution integrated into the platform. And so we're starting to see that, and I think we're much further along on the custody side now than I would have thought we were probably 2 or 3 months ago. And Fidelity just announced recently they're getting in the space, Northern Trust, BitGo's there, Kingdom Trust, the list kind of goes on. So there are people out there working on these institutional grade custodians.
So how does the exchange help you find investors? Because I talk to everyone wants to talk coaching, but at the end of the day, what people really want is money, right? So how does approaching OFN or AirSwap, how does that help me attract capital?
Yeah, I think my response to that is the ability to diversify. So tokenization, obviously, we're seeing low-hanging fruit like real estate and funds, which are well-suited for kind of fractional ownership, and tokenization certainly fits right up that alley. So as I look at the value prop for an issuer, it's tapping into new pools of capital, whether that's kind of the oxymoron of traditional crypto investors or progressive, ultra-high net worth individuals or family offices. I believe that it just facilitates the liquidity and opens these types of investments up to new pools of capital.
Yeah, I mean, we would love to take different pools of accredited investors and bring them together. And I think there's, you no longer have these potentially walled gardens of liquidity. And so one example is if you look at the different real estate crowdfunding sites, so CrowdStreet, PeerStreet, Realty Mogul, they're all great, but you have to, as an investor, do your KYC on each site. You then have to look site by site to look at the different deals or the REITs or whatever it is you want to invest in. And it just becomes annoying. And so if we can take that, if we could tokenize all these potential assets, get them onto AirSwap, get them on to this single exchange, you're only doing your KYC one time. I mean, from an investor friction perspective, it's just so much easier. I don't think we're there yet. I think there's a long way to go. But I think if you can take some of these existing pools of investors and start, converting them slowly, then you'll have a pretty robust liquidity pool.
All right. To ask you guys both to put on a little bit of a crystal ball here. I know, it's always the fun part, right? How do we see this market developing? What are the steps that we see over the next 12, 24 months that lead from where we are today, assuming we're going to get to a liquid capital market for the tokens? How does it unfold? What's the story?
You wanna go? No, me?
Yeah, I'll go. So, I mean, well, first of all, our general counsel told me never to make predictions, but from a personal perspective,
He or she's not here.
I think he was actually. He just left, so I can talk freely. I personally think that some of the excitement will come with assets that are just fun to own and assets that are communities. So think about tokenizing a football team or some sort of art piece. At the end of the day, you might get a return from that, you might not, but you're part of this great community, you're part of something that owns that, and I think that's where we'll start to see some of the excitement. Some of the real estate assets, probably a little bit drier, and there's also maybe a pool of people who just want additional returns and they're looking at straight IRR. But I actually think it'll be really fun to see what sorts of things can be tokenized. You know, I was talking to this company, StockX, and they do sneaker trading. It's like collectible sneakers, and I don't understand this market at all, but there's this market for like $700 sneakers. And so I think things like that, that'll be traded on these sorts of exchanges. That's where the excitement will be.
Yeah, and I would say the next 18 to 24 months is really a proof of concept phase. And at the simplest level, it's can books and records be compliantly maintained on chain? We're obviously making a big bet that we think that it can. AirSwap is as well, and others. So I think once we get through that phase and we see, you know, the leaders in the space who are looking to tokenize, you'll see fast followers, you'll see institutional adoption, and tokenization just becomes the default way that companies raise capital, whether that's a public company or a private offering. It's just a much more efficient way to get to a broader base of capital. So again, we're in the national anthem. The game hasn't even started yet, but there's really strong signs of good, solid infrastructure out there, which I think gets us to that point over the next 18, 24 months.
Great. And to what extent does it matter what platform or protocol or chain my coin was minted on in terms of the exchange process?
Yeah, so for us, the obvious support default is Ethereum, just based on where we are from kind of a development standpoint. But I would say we're chain agnostic and protocol agnostic. It just becomes a resource allocation in the ability to support those different chains. And so as we look at our business and our strategy, we want to give priority to those protocols and those chains which are driving the most interesting projects. Because at the end of the day, we believe that good, solid inventory on the platform will bring users. So, we want to be a platform where the highest quality projects list and trade. So if that's, Stellar, for example, that becomes the default, chain, and there's a protocol tied to that, then that's something that we will invest in to support.
Yeah, it's the same answer. So we're also Ethereum based, but we kind of follow the excitement, follow the developer energy.
And so if I come to you with a protocol that's not yet supported by your platform, you'll spend the time with the issuers?
Yeah, absolutely. I mean, we'll spend the time to vet out whether or not that is a business decision that we should make to support that protocol at that time. Nothing is off limits right now, that's the fun here. And there's a lot of interesting things, it seems like, on a daily basis. So, we want to make sure we're having those conversations and making decisions based on, solid interactions and good evidence of something that is scalable.
And what's the timing? I mean, from the time that we meet or that we approach the platform, what should we expect the timing be before we get to a trading, assuming that we're at the point where the regulatory part is fixed? I
mean, from a technology perspective, it's a pretty quick process, so these things could be live, whether it's 1 month out or, several weeks out. I think it ends up just being different restrictions on trading, different lockups, and that'll affect the actual trading. But from a technology perspective, the technology is there.
Yeah, ditto. For us, it's really about when you approach us as to what that timing looks like. Like I said, we've had people approach us very, very early on, really in concept phase, which is a little too early, but also right as they're kicking off their fundraising. So, we can be ready to go and list, very quickly, as long as we're engaged at the right time.
All right, and I'll give you guys a quick slot for an advertisement for your company. Why should someone approach you? Or why should someone come to your platform?
I'd say we have one of the best user interfaces in the ecosystem, and so it's going to be a place for people to trade and just an exciting place for them to go and check out new things. So I think will be a lot of fun assets on there.
Yeah, and for us, I think it's the pedigree of the team and the operational history. And the opportunity for us is obviously new issuances and new types of securities. But given our, again, the experience in the alternative asset space, we think there's a massive opportunity to tokenize existing securities and be a facilitator of tokenization. So with that, there's very quality assets, whether those are real estate assets or private equity or hedge funds, et cetera, that we think we can facilitate bringing those on-chain over time. And that gives us, again, solid inventory, good product on the platform, which then drives more users and obviously more liquidity.
All right, and one more crystal ball question, which you're going to squirm at. When do we have a market where institutions are comfortable coming to buy and sell security tokens, and where you'll see the representation in your Schwab account and other places?
I think you need a custody panel for that.
Oh. Right.
Now, for me, it's custody. When there's institutional grade custody, institutional capital will play.
You think so? That's pretty quick, probably.
Like I said, I think it's quicker than I would have thought a few months ago.
Excellent.
As soon as Fidelity, Coinbase, and Gemini figure it out, then the gates are open. So.
All right, cool. I think we have like 2 or 3 more minutes. Does anyone have a question? I'm assuming there's some token issuers out there in the audience. I can't see anything, so just stand up and talk if you have a question.
How much does it cost to list?
$1 million. No, that's obviously an important question. And you hear about these insane listing fees on some of the traditional exchanges. We're not charging 7 figures to list. Our goal, again, is to have the highest quality projects on the platform. So we need something that prohibits poor quality projects from wanting to list, but we also want something that is palatable for good projects. So that right now is a $50,000 annual and initial listing fee, which feedback has been very solid and good on that amount.
Maggie?
So come find us afterwards.
All right, guys, thank you very much. 49.85.